Okay, so one last thing I want to address here. On the higher time frames, we definitely were looking for a move up off of a baseline, off of a key level. So if we look at a monthly, we look at the weekly, and we even look at the daily. Um, the daily is the only one that kind of gives me some kind of peace around it, thinking that maybe we're not going to explode upwards and maybe we're done with this little quick pullback. Notice that we're in an overall downward trend. We've been there for a little while. Even in the higher time frames, we're actually overall very bearish. The monthly, we're bearish right now, but we are sitting on a key level right now. So that's what originally made me think that we were going to actually move up to this yellow line, which is coinciding with the 50 EMA. Um, I'm not sure that I really feel that way about it any longer. And the best way to play this really is going to be a quick short-term play. So even though I've got almost the 1.0 level suggested a little bit before it, and the reason I did that is because of the previous measured fib level. I like to use the past fib levels as kind of a profit target or whatnot. So this would actually go across and be a key level. Let's go ahead and draw that in, and maybe we can see where it connects a little bit. Okay, I've got gray sharp here, lines here, but you'll see that it touched a couple times. 1, 2, 3, 4, 5 on the downside, 6 on the downside, on the bottom side of it. So yeah, this is kind of a more of a conservative level. The most conservative would be the 618, and we can aim at the 618 if, depending on what happens with price action once we get to that level. Okay, so really it's going to be playing by ear, just being smart about it. Don't get too greedy on this play, because it's not like a setup for a huge move in the long term, but it is a setup for a significant move in the intraday charts. All right, peace.